Hello everybody and welcome to my monthly Vietnam update. The Vietnam index jumped to a new record high, mainly due to commodity stocks like, for example, Petro-Vietnam gas, which increased by 30% over the months. With nearly 100% of eligible adults now having received the first vaccine shot in Ho Chi Minh City and Hanoi, and more than 85% being fully vaccinated, optimism returned of an imminent recovery of the economy. The market advance was broad-based, with all market sectors experiencing strong gain. The AFC Vietnam Fund had also a strong month, increasing by plus 4.4% according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the notifications so you don't miss any new uploads. Computer chip shortage, car production delays, port congestions, a lack of truck drivers, whatever you can think of, inflationary pressures. After too many months of denial, officials finally acknowledged that inflation is real and not temporary, as they wanted us to believe for quite a long time. Their argument that current inflation is just the result of temporary supply chain nightmare which we are currently experiencing is not wrong, but wasn't every inflationary period in the past, like the 40s war period or the 70s oil shock, always a result of too little supply chased by too much demand? Tapering is certainly on the mind of Western central banks, but we can also see first interest rate trend reversals in some countries around the world, such as, for example, New Zealand, Norway, Poland, or South Korea. Here, the Fed Fund chart rate since 1954, and you can clearly see, there's very little room to the downside, obviously. The situation is not much different in Vietnam. We think the bottom in interest rates seem to have been reached. Also, with an inflation rate of less than 3%, Vietnam is one of the few countries still offering positive real interest rates. Here you see a chart of one of our portfolio companies. It's GDT. They are wooden kitchenware, children's toys and home furniture producer with strong exports and a very healthy balance sheet and a very strong management team also. And despite production halts in the third quarter of this year and a 70% loss in the revenues, the company still managed to stay profitable with only a slight reduced net profit margin of an impressive 17%. Here, once again, it paid off that we focus on companies with strong balance sheets and good business models. Yeah, interest rates are at the bottom, as I mentioned, and here you see that for insurance companies, 80% of their total investments are in deposits, and now with increasing interest rates, that should have a positive impact on various companies. Here, for example, the Bao Viet Holding, it's the largest insurance company in Vietnam. If you look at the first 6 months of this year, that stock declined by around 12% compared to a VN index, which performed plus 27.6% in the same period. So obviously, insurance companies vastly underperformed, especially in the first half of this year. And the reason why is because interest rates went down, the bank deposit growth rate obviously suffered at the same time. And obviously inflation fear, here we see the factory inflation at the near 26-year high in Vietnam, just as an example. But when we look at the profit growth of the third quarter in Vietnam, things are turning around. I mean, we see a very strong profit growth for PVI over 100%, but also ABI over 70%, which is also a company which we own. So Here, once again, a chart which shows how the insurance sector underperformed the market. So the insurance sector is the red line versus the VN index, the blue line. And yeah, that's all from me from this month. And I hope to speak to you soon next month when I will talk about our November update. Thank you and goodbye.